Apple had just had their record-breaking Q1 2021 earnings. They broke the EPS expectation by almost 50%, and yet the following day, the stock price is on the red. So stick with me on this video. I want to give you my personal 5 reasons why Apple has fallen today and what is the future ahead for Apple. Apple started off with the earnings really good of the EPS 1.4 versus 0.99, record-breaking Q1. Not as great as the last Christmas Q4, but they were close enough. In fact, they were so close they almost beat last year, 2019's Christmas earnings. That's how good it was. But one word I want to start off by saying is as expected, okay? Everybody paid Apple's price up to 2.24. They expect them to do well. The 5G phone for the iPhone 12, they expected record-breaking sales in the generation change of the phone, record-breaking iPads because of people staying at home, record-breaking in the new M1 MacBook where they produced their own chip and they reduced the gross margin. It's all as expected. They've executed. So I'm not surprised if the share price has stayed where it is or slightly lower than expected. Sitting at $133, $2.24 trillion company. They've done well. There's nothing wrong with it. That's the company you invest, and that's the company that's giving you the value today. Alright, let's quickly now jump to my 5 reasons why I think Apple's earnings, despite record breaking, is not helping the stock go even higher to the moon. Okay, the first reason is, like I said, expectation. Expectation is met. Okay, the company itself is a $2.24 trillion company. Think about it. Back in 2020, this time last year, it was a $2 trillion company. And back in 2018 July, it was a $1 trillion company. Back in 2016, it was a $0.5 trillion, so a $500 billion company. So for the last 2 years, every 2 years, they've doubled from 500 billion to 1 trillion to trillion. So people invested like myself, we've seen it double in such a short period of time. We've seen it doubling effect a few times. So it's expected. They've delivered what they expect, and this is where you are. You're already paying the future value. This is the value being priced in for Apple. And number 2 is the buyback. It's one of the key things that helped the share price boost up 2% yesterday, and now it's back down again. $90 billion buyback is a great thing. Technically, for shares or company, is great. It helps to reduce the number of shares outside. It's making it more scarce, making ownership of Apple shares very exclusive. However, people are thinking, if you are a growth company, why don't you invest $90 billion somewhere else? Buy a company, buy anything. They could easily buy a car company and produce electric vehicles, but no, they decide to buy out their own shares. And number 3, it comes to the roadmap. Okay, we know that Apple is focused on reducing gross margin, the M1 chip, the M2 chip. They're trying to capitalize on small accessories. They're trying to capitalize on wearables. But seriously, where are the EV, electric vehicles, that they have been talking about and they've cancelled a couple of times? We've heard rumors about eyeglasses. Where is it? We've not seen anything. What about blockchain? Blockchain will be the next big generational change. Have we seen Apple in blockchain? No. How about the medical? We've got our watches that's trying to generate and accumulate data for Apple to build the next big medical product, but I've not seen that. And number 4, like I said, the service growth is 16.9 billion. Last year was even better, and now they're growing. They've got the music, the podcasts, the games, the arcade. They're growing more and more. They're doing all-in-one subscription economy. So it's $26 billion just now. We're waiting for it to grow. Okay, look at Google's YouTube. It's starting to sprout about $6 billion generated revenue. Now we've got services for Apple. What else will they add? What else will they give to give us additional value for money? That's what we want to see as investors. We want to see that service revenue pass iPhone, because Apple is no longer just an iPhone company. It is a whole holistic technological consumer business. We've got the 5G phone. We've got the iPhone 12. So iPhone 13 is not going to be a revolutionary change. 14 will just be another size difference. So in 2025, which is the expected next generation revolution change, I'm not talking about 6G. I'm not sure what it is even. I don't know if Apple's got a vision. What will be the next big thing? Will it be all-in-one computer? The cycle is gone. The cycle has just peaked itself, and now we're going to hit Christmas 2021 with nothing too exciting. So this is a reason why I think the share is just pulling back. It's just sitting down at the beach. It could be there for 6 months. It could be there 9 months. We know that Apple will come in Christmas beating record quarters with the new iPads and iMacs and variety of stuff just to make us spend money. But what is the next big thing that's going to push it even higher? Last part, I just want to share why Apple will be a perfect portfolio play for your kids' portfolio. Yes, Apple may be a company that looks like it's peaking and we still no visibility ahead, but if you invest Apple for your kids, it will be a great investment. Why? Because think about it, Apple, as you see today, are starting to pay dividends. The growth is not as high as when it was 5 years ago. Growth are slowing down, but they're still growing, they're still investing, they've got perfect cash flow. It's like a whole ecosystem, they're like a planet on its own. They've got their own oxygen, they've got their own water, they've got their own animals. So if you invest for your child today, whatever dividend you get may look minute at about 22 cents per share. But this will start growing. To retain their peak at $2 trillion, they have to start paying more and more dividend once it's slowed down, they're paying dividend. So for you investing your kid, you're looking at the horizon of 10 to 20 years. Potentially even 30 years if it becomes a trust fund eventually. So investing in Apple is number one, it's safe, it's great for your kids, and most likely you're going to use the products. And end of the day, it's paying a dividend, it's growth, it's way better than trying to buy a dividend company which is on a decline. You're buying a dividend company, small dividend company now, but this small dividend company will become eventually get bigger. So it's pair of safe hands, and it's one of those stocks, I just want to really honestly tell you, it happens to me, that you buy and forget. And you know what, I forgot that I had how many number of Apple stocks I had to actually go in yesterday and check that. Oh wait, I've got some for myself, my daughter, my wife. Oh, we've got retirement funds in Apple. We forgot Apple shares in our portfolio because it's one of those you actually buy and forget because you're so confident in the company. Thank you very much. I hope you enjoyed this segment of why Apple stocks has fallen and why you should be putting in for your kids. But for now, leave a comment below and tell me if you've already done and invested for your kids, because it's really important. It's cheap today. If you look next 10 years, you look back, why did I not invest more?
I hope you enjoyed that video. Please like this video and subscribe to the channel. Please press the bell button. Ding dong. Finally, watch the recent video up here.